Well, last week, USC Nigeria PLC announced it has concluded plans to restructure the operations of 3 of its subsidiaries. According to the company, this became necessary because its right issues of 160 million ordinary shares was discontinued owing to the weak performance of the Nigerian capital market. Well, let's get Rotimi Fakeje, now CEO Enterprise Capital, to look at some of these issues. Good morning, Rotimi.
Good morning, Chimeze.
Now, USC at its AGM last week announced its restructuring plans and the fact that it has cancelled its right issues. What does that say about the state of the Nigerian capital market, considering that USC is one of the blue chip companies?
Yes, USC has done very well in time past, and I think in recent past, if not for the economic downturn, they are still trying their best. But I think with weak earnings in recent times, and also the weak performance in the market, it has made raising new issues to become a Herculean task. We saw the very last tranche that was done in the banking sector, the likes of UBA, Diamond Bank, and Access Bank. It was almost not being successful, but at the end of the day, they had good success. But I think with the way the market is right now, it does not really make much of a sense to come and raise new issues because of the likelihood that such issues may fail, as we have seen in some companies. First Bank made an attempt to do so, but I think with the way the market is, it still doesn't make sense to do that. So USC PLC is actually in the right direction, and to have seen what the reality in the market is right now, and to have made up their mind to seek other ways of raising funds. And I think if they opt for bond, they may achieve more success than actually doing equity right issue. So I think they are really definitely positive in the affirmation they have made to the market that they are not going to do right issue anymore.
Now, how do you think this development will affect the company's assets?
Well, I think to me, for them to have seen a need to raise fresh funds, it means there is a gap in their financing. And if that be the case, it's definitely going to impair negatively. They can't get good financing at good cost. Because ordinarily, if they have done the right issue, it could have just been like a no cost for them, in the sense that whatever profit that they declare will be what they will declare to the will be the return on those funds, or such funds raised. But if they have to do bonds, definitely it's going to affect their future earnings. So I believe that was the reason why they are primarily looking at the right issue. But be that as it may, as it is now, they may not necessarily have an option but to do bond. And I think they really are doing that, looking at that option. For me, with the way it is right now, it is a very, very tough environment for companies, especially USC, and whereby the rate of consumption of their products is dwindling, and not really as a result of their own making, but because of the reality in the economy. So I think it's going to create a gap, and that gap will definitely impair on their future earnings. But I believe if they do bond, they will still be able to get by what they are facing right now.
And what are the investors or the shareholders of this company saying at this time?
Well, I think for investors, much as they may have that, much as they may have that desire to be part of the right issue, if they don't have the power to do so, that is, if the resources are not there, then there is nothing they can do. Though last time they agreed that they should be raised. But with the reality on ground and with the state of the market right now, it just doesn't make sense. So the investors will definitely have to at least hold on to themselves and depend on the management of the company to seek other avenues to raise funds for the financing of the company.
No, the Securities and Exchange Commission, the Nigerian Stock Exchange, and all the stakeholders are working to kind of integrate the Capital Market Master Plan into national planning. Do you think this would help in growing the Nigerian capital market?
Yes, I believe so. Because what we lack in Nigeria is an integrated plan that is co-opting everybody that is present within the enclave called Nigeria. And for me, what we have been experiencing in time past is a standalone arrangement, standalone plan, standalone processes, whereby A will go on his own, B will go on his own, and D will go on his own. There is no integration of whatever they are doing. So if at this point in time they are doing this feat, and by thinking the right direction, that there is need for the capital market plan to be integrated into the national plan, because the economy cannot really move forward without a viable capital market. And the earlier we begin to see that, the better for us. So if the federal government is going to accept it and adopt what they are presenting to them, then I think it's going to be a great thing happening to the capital market.
Well, adoption is one thing, implementation is another. What do you have to say about that, implementing this master plan?
Well, if you look at Nigerian as an entity, in time past, we've had different policies, different working arrangements, different master plans, just name it, year 2020, year 2015, just name it. But what we lack is implementation. So it's not limited to the capital market plan alone. It's limited to the entire country. So if this present administration is going to turn a new leaf by not following what the past administrations have been doing, then definitely we will be on the right course. But that implementation is what every Nigerian is skeptical about. The good plans will be there. The way to, the modus operandi will be fantastic, but at the end of the day, we will not see implementation. So we want to hope that things will not continue as usual, that this present administration will turn a new leaf and begin to do things the way it should be.
Okay. Now, going forward, what do you think should be the immediate thing that needs to be done? The Capital Market Master Plan is a 10-year program, so to say. What is the immediate thing to be done in order to ensure investors' confidence, or rather bring back investors' confidence into the market?
Well, I think for the Securities and Exchange Commission is making efforts every day and putting on their thinking cap to ensure that things are done properly. And the first step we have seen in that is the dematerialization and also the e-dividend. These are been one of the bans in the market before now. But with the full dematerialization and also the e-dividend mandate implementation, I believe investors are going to be better, are going to have more interest, and their confidence is going to be restored in the market. But there is so much more that will need to be done. In fact, the fluctuation and in the prices of stocks, though not a result of what investors do, but I think the uncertainty within the system is really what is causing some of the loss of confidence. And I believe that if proper plans are put in place, Securities and Exchange Commission, Nigerian Stock Exchange, and the stockbroking community are putting all hands on deck and working together, I believe investors' confidence will be restored over time.
Now, Rotimi, just wrap up this for us. The market, of course, has resumed for today. What's happening in the market now? How is the market performance right now?
Well, the market is having a very weak start this morning. In terms of volume, the market has done just barely above 50 million naira value, and also the Osha index change is about 0.07% negative. So it's really starting on a very weak note now. We only hope the market will pick up as the trading continues.
All right, thank you very much for your time, Rotimi. Rotimi Fakeja, CEO, Enterprise Capital, talking to us there from the floor of the Nigerian Stock Exchange. And that's it on the program. Thank you for watching. I'm Chimizi Obiwa. Good morning.